Today's top picks from our agenda-setting commentary arm, Reuters Breakingviews, why corporate earnings hopes are still too high, and Alliance Boots boss pulls off quite a coup. With me now to discuss these stories is Reuters Breakingviews assistant editor Robert Cole. Robert, thanks for joining us once again. Let's talk about these corporate earnings and the hopes are still too high. Is this a question of people getting ahead of or not catching up effectively?
I think so, yeah. I mean, I think, we're coming to the end of the second quarter, June, and so people are really starting to begin to concentrate on what this quarter might bring us. And I guess forecasts for this quarter have come down a bit, but I don't think that they've come down far enough. And if you look back at what sort of analysts' expectations have been in previous years, I think it's slightly unfair to say that they're always wrong and they're always too optimistic, as some observers have done in recent months. But in 2008 was a year when they were much too optimistic and had to revise their forecasts quite quickly. And, as time goes on, it seems to me we're in one of those situations where, the Eurozone crisis is bubbling, problems in the US are beginning to emerge, we've got China, and I'm wondering whether actually these are fully factored into the forecasts and whether some slide off in expectations, perhaps even into red territory, into red ink territory, will come. And I've found one really quite interesting statistic, which is that if you look at the S&P corporate earnings over the last 40 years or so, I think there's an average annual growth of 8%. But in those years, or in those periods when the growth was less than 8%, so if you like in the bottom half, the average in that bottom half is for minus 6% growth. Okay. So there's a very broad spread of earnings, but I think that perhaps people are thinking, well, perhaps S&P and European earnings might fall a little bit. I think that we could be looking at least 6%, perhaps into double figures by the time we get the numbers. But is it part of the
nature of the system, though, that maybe the way that the analysts look at it is a lagging indicator? I mean, is that putting a positive spin on it?
Well, of course it's a lagging indicator, because
so is it just a question of trying to build in a bit more time so that they do catch up?
Yeah, and let's see. Perhaps because the criticisms have been really quite tough. Perhaps analysts are trying to get ahead of the curve a bit more, but I still wonder. I think that I think it's also important to say that while earnings are falling, that doesn't necessarily mean that we're in for some kind of crash in equity prices, particularly in Europe. Shares are really cheap.
Europe's a lot worse, isn't it?
So the market may be where the analysts ought to be and will eventually get to.
And you're also signalling the beginning signs of more profit warnings as well.
Yeah, well, Danone and Procter & Gamble on both sides of the Atlantic have given them, to their account, of profit warnings. I'm not sure, but they're certainly not terribly optimistic statements, and that feeds through. And these, of course, are consumer staples companies, which ought to be the real sort of steady ones in difficult times. So the more cyclical plays might be in for even more trouble.
Okay, well, let's move on to what was known as originally as a defensive, this being the chemicals or the pharmaceutical side of things. Alliance Boots boss pulling off quite a coup, referring here obviously to Stefano Pessina, but he's been through a series of processes where he seems to have come out on top every time, and you think this latest one is exactly the same.
Yeah, this is a view which is all in the observation, really, which is that here Alliance Boots has pulled off this deal with Walgreen, selling it out of KKR, of course, and a substantial premium. Now, normally, one of the big reasons why a premium for a takeover exists is that you're surrendering control. And of course, one of the major shareholders in this is KKR, and it's doing exactly that, so one shouldn't forget that. But Stefano Pessina here seems to, he's owned some shares, he's getting a premium for his stake, but he's also going to, it's not quite exerting control, but I think could end up with 15 or 16% of the stock at the end of the day, which will make him the largest shareholders and certainly have a loud voice at the boardroom table. I think it's important also to register that Stefano Pessina will only get that large stake because he is electing and committing to take his consideration in shares, so it's not like he's cashing out. But still, it's a
3-year process as well, so it'll be 74 when the whole process is completed. Do you think he'll then sort of carry on as a major role in the company, or at that stage do you sit back and say, well, actually, I'll take the money, goodbye?
I think he will have a major role at the company, but whether that's as a director come major shareholder or as an executive, I think is more moot. There are various people you can mention, and life expectancy is going on. You know, you and I, we can't expect to retire until the age of about 98 now, so perhaps it applies to Stefano Pessina as well.
Okay, so he's putting himself in a pretty good position.
Very much so.
Robert, thank you very much indeed for that. Robert Cole there with the latest stories from Breakingviews. For more agenda-setting financial insight, watch our US Breakingviews show every day at 12:30 Eastern, 17:30 BST. I'm Nigel Stevenson. This is Reuters.